Will the Fed decide whether you win or lose in Donald Trump's economy? Professor Richard Wolff weighs in. Check it out. Leave your comments, ding the bell, share it with your friends, and subscribe to our channel. So I'm getting a sore throat here just from the first hour of belting out this show. The air in Oregon is just an absolute mess. And at the same time, our economy is an absolute mess. We had a caller in the previous hour saying, how is it that the stock market is up when nobody has the money to buy anything? I mean, I don't understand how that works. It's being reported that the Fed now owns a third of all the mortgages in the United States. When did that happen? The Fed is buying stock in big companies. What the hell is going on here? Let's check in with Professor Richard Wolff, the economist, the co-founder of democracyatwork.info, the author of numerous books. His most recent, Understanding Socialism, and rdwolf with 2fs.com is his other website, Prof. Wolff with 2fs over on Twitter. Professor Wolff, welcome back to the program. So what's the deal? The Fed owns a third of our mortgages? Really?
Yep, it does. And the way to understand this is to see it sort of historically. One of the ways you judge an economy is whether or not the system of the enterprises and the organization of the factories and the stores and the offices does or does not equip the mass of the people in a society with the things they need to lead a decent life. And we all know what those are. An adequate supply of food for a healthy diet, clothing to keep warm, a roof over your head, housing, medical care, transportation, schools, we all know. Well, one of the most important of those is housing. And once upon a time in this country, before say previous to 100 years ago, we were in general able to provide housing for people. Wasn't the greatest, particularly in our cities where waves of immigrants came in and had to live in tenements, but we provided housing. To make a long story short, when the Great Depression hits in the 1930s, a quarter of Americans lose their homes, a spectacular collapse of the ability of people to pay rent, the ability of people to buy their own home. And it became finally clear in that terrible crisis that we had a problem. We did not give the mass of our people enough in wages and salaries to be able to afford a decent home if they were going to feed themselves, et cetera, et cetera. So the government, and I know this is a problem for libertarians and others, but the government stepped in because there was no other way. And it started in the 1930s. We created a series of arrangements. The most famous was basically the government coming in, setting up an institution which guaranteed the mortgage that a person would take out to buy his or her home. In other words, for a small fee, the government would step in and say to the bank, go ahead and lend money to Mr. and Mrs. Smith to buy their home, because we, the U.S. government, will guarantee that even if Mr. and Mrs. Smith can't make their monthly payments, we, the government, will do so, because there was no other way to get the banks to lend to the average Americans who were going homeless. Now fast forward to today. The situation today is even worse. That's really important. Even worse for the housing market of this country than it was back then. We have tens of millions of people facing eviction now at the end of December of this year, and we have huge numbers of people that have stopped paying their mortgages and do not have any prospect at this point of being able to do it. No bank in their right mind, therefore, would lend money. Nobody would lend money to people now in the business of buying or trying to buy a home because of the terrible economic circumstances. Enter the government in a bigger way than ever before. Basically, what the Federal Reserve is doing is saying to all American lenders, particularly mostly banks, go ahead, lend money to a Mr. and Mrs. Smith for a mortgage to buy a house. Don't worry about it, because literally within minutes after you sign the papers, you bank, you've given Mr. and Mrs. Smith $100,000, you've gotten the mortgage written, you turn around and you sell it to the Federal Reserve. How does the Federal Reserve pay for it? by printing new money. The Federal Reserve creates money. It's been creating money by the trillions over the last 6 months. And so what it has basically done is said, we will now, in the end, provide the credit for the housing market. It's important to understand that fundamental to our capitalist system is the housing market, and that is now on life support from the federal government, as so much else is. And that the notion that we have a private capitalist economy is a mistake. We have an economy that can't function on a private capitalist basis and therefore is relying on the government while it pretends that we still have a private capitalist system.
So the mechanism for this, the how it works, I'm guessing is relatively invisible to the average homeowner. Somebody goes to Wells Fargo, takes out a mortgage, buys their house. The person who sold the house gets the money. Wells Fargo has the paper. Wells Fargo makes the commission and books the profit immediately. And then Wells Fargo turns around and sells that mortgage to the Fed. But the Fed's not in the business of accepting your monthly payments. That's still going to Wells Fargo, isn't it?
Often, yes. Often the arrangement is, because the Fed doesn't want to be in that position, that they have an intermediate, a mortgage servicer. It can be the bank that originated it. It's actually more often another intermediary that functions in that way. You, the mortgage holder, may end up sending your monthly check to the same place, but all that is a mail drop. It is all handled, of course, paid by the Federal Reserve, which is you and me, basically, paid to handle it. But the final owner, the creditor, the person who legally has lent you the money, is the Federal Reserve. The government, and by the way, as a result of that, mortgages are available. You wouldn't be able to get a mortgage now for millions of Americans. And even if you did, you'd be paying much higher interest rates. So the government is coming in, providing the money, driving down the interest rate. Current average interest rate, 2.91%. That's because the Federal Reserve has stepped in with this, freely printing and creating money to stimulate the economy in this way. The only joke, if you like, is that the promises that were made back in the 30s that this was a temporary arrangement to get us out of the Depression, turns out it wasn't temporary. It has never stopped. It's only bigger now than it was for most of the previous time, except in moments of spiking. So you can see a total reliance on the government.
So a friend of mine's son moved to Portland a little while ago and was looking for a house. And this guy reached out to me and said, you don't have any houses for sale? And I'm like, I really don't, but keep me up to date. He made an offer on a house, and at asking price, within an hour, they had two other offers that were $100,000 over the asking price. This is a $600,000 house, which is kind of average house here in Portland or in downtown Portland. I'm not in downtown, but housing is expensive down there. Is that why? Is that why housing prices are exploding all over the country?
It's part of it. It's part of it. But absolutely, you've got record low mortgage rates, which means you can lock into a house with 20 or 30 years of historically low amounts of monthly cost of the mortgage, and you have literally an open spigot on the money because it's literally being created with a click of your computer in Washington, D.C. in the Fed headquarters. So yes, the answer is...
Does this end badly?
The reason that happens is it's kind of crazy time with the money.